You won't believe what Jake Claver said in his brand new chat with Ray Fuentes. Some of the clips from this talk with X that came out about Ripple and XRP will blow your mind. Jake even told us something new about the Basel updates and how they could put XRP in the spotlight. This was near the end of the talk. Now is the time to pay attention if you own XRP or have been closely following Ripple's actions. Everything will be broken down one by one, from what this interview said to what Basel's advice really means and how it could forever change how banks around the world use XRP. Let's start right away. Also, don't miss that. Now let us go back to Jake Claver. Jake began his chat with Ray Fuentes by talking about rules in the United States. Senator Cynthia Lummis has been working hard to get the Clarity Act passed. She says it will happen by the end of the year. That would be huge because the Clarity Act is the main law that says how digital assets are categorized, whether the SEC or the CFTC controls them, and what big institutions can do to start using crypto on a large scale. Don't forget that the Genius Act was already signed into law. This is the last piece of the puzzle that we need to really get institutions to accept it. Also, let's be clear, the money starts to move as soon as the rules are set. Companies, hedge funds, and banks will all know where they stand, and standard finance and DeFi will come together in a way that we haven't seen before. Jake even said that companies are being bought out and integrated quickly, making an ecosystem that combines standard finance with blockchain rails. This is the point at which it gets even bigger. Jake said that over $200 million worth of XRP is being used right now at Digital Wealth Partners, the hedge fund that he helps run. They're even running plans that give cash payments every 3 months. I find that very interesting since it's not just speculation, but real financial goods built on top of XRP. What is the most important rule at Digital Wealth Partners? Do not lose XRP. The second rule they made, look at rule number 1. The fact that they are so sure of the asset over the long run says it all. Jake didn't end there. He made it very clear that their goal is to become one of the most well-known banking institutions in the area. They don't want people to feel like numbers, he said. They want a company like BlackRock, but with a focus on people and mission. That kind of ambitious thought about the future shows you where this business is going. Market-wide, not narrow or small scale. Assets like XRP run a huge financial infrastructure. Now Ray asked him about big picture economics, especially Japan's attempt to have negative interest rates. There was a time when Japanese banks paid people to borrow money. That's how crazy it got. Jake said that how much fintech companies are tied to Tether and other similar assets will have a big effect on the industry. It was then that Ripple came up. While Ripple used to depend on Tether and USDC for some of its infrastructure, they have now cut those ties with their RLUSD stablecoin and are fully independent. They also do regular audits. That's very important because it shows that Ripple is building long-lasting legal systems that can be used all over the world. Jake said that, in fact, Ripple could be one of the biggest winners when the so-called reverse carry trade is undone. Plus, big investors like SBI and others are backing Ripple. This makes it easier to see how XRP could be the big winner in the next global liquidity shift. Then there was one of the most powerful parts. What does XRP mean to you, Jake? Ray looked at Jake's XRP pin, which was right over his heart. Jake's answer hit hard. His words made it sound like he thinks XRP will one day be closed to everyone. It will become very hard to get if it really becomes the core of the global financial system and the way that big businesses move large amounts of money. Since there is a limited quantity and a steady daily demand, XRP will become less and less available over time. That's why XRP is important to him, to the point. After that, we got to watch an old talk with Brad Garlinghouse that goes well with what Jake had just said. Brad said that holding XRP was like having a basketball underwater. And the SEC case slowed it down for years, stopping growth and adoption, but of course, it was going to go straight up once that fake pressure was taken away. That's exactly what we've seen the last year. Brad said that Ripple always looks at the big picture. Price changes are important, but what's even more important is how XRP will help build an internet of value in the long run. Consider it. RippleNet is basically going up against Swift in the global payments message market. When you add XRP as the quick settlement layer, Ripple has the communication layer and the settlement layer all in one place. That's a crazy good value offer. Now let me explain why this is so important. Ripple had to wait for years because of the lawsuit, but now that it's over and things are clear in the US, the holds are off. Now that the ball is loose, XRP is going up on its own. Brad did warn everyone, though, that tokenizing assets worth trillions of dollars won't happen right away. It is thought that only 5 to 10% of financial assets will be on-chain in the next 10 years. That's still very big, but it shows how big the building project is. Brad stressed the need for unity around the world to speed up that process. The G7, the G20, and foreign working groups are all agreeing on rules and how to make things work together. Tokenized assets can move freely across countries, but the rules have to be the same for everyone. In both the real world and the blockchain, data about a house or business that has been sold has to be kept up to date. That's the slow spot at the moment, using Bitcoin to sync reality. That is the reason why Chainlink, Ripple, and other businesses are working on different pieces of the puzzle. We need to be able to work together. The whole system won't be run by a single object. But XRP is set up to be one of the most important assets in the mix. And I agree with you. We only need to wait a little while longer for XRP to pass Bitcoin as the most valuable digital currency. Brad talked about demand at the end of the conversation. If there is demand and there is a barrier to inflows, like the SEC case, the price will simply go up. To see this, think about Bitcoin ETFs. We are just at the start of that market wave. Now think about what will happen when banks, national institutions, and reserve assets start holding XRP. More people will want them than ETFs do right now. That's exactly where Basel comes in. When we talk about reserves and organizations, this is where Jake's conversation and Brad's point of view fit together perfectly. That's exactly where Basel comes in when we talk about reserves and organizations. This is where Jake's conversation and Brad's point of view fit together perfectly, because the Basel Committee letter from August 2025 had something in it that not many people are talking about right now. But for people who own XRP, it could change everything. What was emphasized is shown below. The name Group 2 has now been given to XRP, a cryptocurrency that global banks can easily buy and sell. Take that in. Group 2. Under Basel, a classification is not just a name. It tells the biggest banks in the world that this asset is safe, liquid, and legal enough to be used within tight risk limits. In simple terms, this means that banks don't have to worry about getting in trouble with regulators when they add XRP to their balance sheets, risk models, and funding systems. What does this have to do with anything? Global banks are very careful with risk-weighted assets because of this. They need to be. These international Basel standards must be used to figure out and accept every dollar, euro, and yen on their balance sheet. Things don't matter how good they look on paper if they don't follow Basel rules. Large banks won't touch it. If an object does meet Basel requirements, on the other hand, it becomes very easy for others to use it. And this is the important part. XRP wasn't the only thing in this letter from August 2025. As well as Dogecoin, Bitcoin, Ethereum, and Solana were all mentioned as assets that met the requirements. Yes, Dogecoin made it, but the most important thing to remember is that XRP is listed with Bitcoin and Ethereum as one of the best cryptocurrencies because it is stable and follows all the rules. The requirements for this title were very strict. For Group 2 assets to meet the standards for hedging recognition, derivatives, ETFs, or ETNs must be traded on regulated exchanges. They also need to be accepted by Basel standards for reducing risk. All of those things are true about XRP. It has deep markets, is liquid, is backed by regulated assets, and is now Basel recognized. It was written in full in the letter. Being in Group 2A lets banks add XRP to their portfolios in a safe and flexible way, support regulated trade and hedging, and follow global risk management rules. That is the best news anyone who owns XRP could hear. It basically means that this product can be used by institutions. In real life, what does this mean? Make up the story of being the CEO of a medium-sized foreign bank. Not as big as JP Morgan or Bank of America, but you're in charge of assets worth hundreds of billions of dollars. While you've been away, blockchain and crypto have been getting mixed messages from officials. Because Swift is too expensive, too slow, and needs huge amounts of money locked up in Nostro accounts around the world, you've wanted to update your payment system. You didn't move because the risk was too high, though. Now you get a letter from Basel, the same Basel committee that tells you your risk ratios and liquidity needs. It says that XRP is a liquid asset that meets their rules. The door opens wide all of a sudden. If you use XRP for managing cash across borders and build it into your rails, you will still be following all global rules. That's really big. Think about how this helps banks save money. Even though Swift has improved its GPI, it still costs 80 to 90% more to run than XRP for fast settlement. And banks still have to keep more than $20 trillion in accounts that aren't being used just to make payments possible. That's a lot of money just sitting there doing nothing. Ripple's method, which is run by XRP, gets rid of that. The savings are huge, and the experience for the customer is light years better. Imagine being able to send a few pennies to a family member or business partner right away, instead of having to wait days and pay huge fees. That's bad enough without having to follow Basel rules too. Savings on costs, speed, safety, and approval from regulators around the world. Since the SEC case is over, this Basel title could be the biggest thing that frees up XRP ever. We're not done yet though. Let's look at what happens next. No joke meant. The Basel group didn't just put XRP on the list. They also asked officials to stop using the current crypto asset standard, which is called SEO 60, and make changes to it so it fits how the market is changing. Not only do they recognize XRP, but they also send a message that the system is changing to favor digital assets. Large banks and institutional buyers start to pay very close attention at this point. They've been waiting for stuff to become clear like this. Basel rules apply everywhere it happens, in Asia, Europe, the US, and more. And when Basel says something is a liquid compliant asset, it means a lot more than just the rules of one country. Professor Fabian Scheer from the University of Basel even said that Ripple has a good chance of replacing some parts of the current banking system. He said that what makes Ripple's system so powerful is interoperability, which means being able to combine protocols and keep files in sync. The XRP system was made to connect different networks and make it easy to send money across borders. That's just the kind of infrastructure that the world's financial system needs right now. One thing should be noted by Professor Scheer. Ripple is different from public blockchains in that it is more controlled. This means banks need to be careful about how they use it. That's not always a bad thing, though. When it comes to institutions, some centralization can be a good thing because it helps them follow the rules and see that they're doing things right. This is what makes Ripple different from projects like R3, which are more focused on private ledgers. People can use Ripple, and it also has methods that are good enough for institutions. It's great in every way. Now that Basel has recognized it, it's not just Ripple saying this. Now regulators and scholars agree with it. Now let's link the world's dots. Over 3,117 banks, more than 330,000 small and medium-sized businesses, and over 2,100 large companies in China have already connected to the XRP ledger. These links go through 29 Chinese areas and 27 countries around the world. Big names like ChemChina, China Mobile, China Railway, Kavco, and even foreign brands like Nike and Under Armour are in this group. In other words, the XRP ledger is already at the heart of one of the world's biggest markets. Also, don't forget that most of these businesses in China are owned by the government. It is important for the government to be able to see all cash flows. Blockchain makes this possible. China makes sure that every transaction can be tracked, inspected, and completed quickly by building infrastructure on top of the XRP system. Think about how much you could save. It's hard to believe that millions of businesses and groups use XRP to settle payments and make purchases. Now think about this case. The world's banks read Basel's letter. China is already making large-scale use of the XRP system. As of now, Ripple is completely self-sufficient, having its own stablecoin and infrastructure. Also, the Clarity Act in the US has finally made regulations more consistent. There are a lot of things that are driving acceptance at the same time. The best part comes next. On the open market, regular people like you and me can still buy XRP. Jake Claver's message is more important than ever. At some point, XRP might not be available to the public anymore. It might only be held by institutions in power, the back end of global banking. But you can still get to it right now. There is a chance that window will close soon. The story about XRP is no longer based on speculation as Basel, Ripple, and world adoption come together. It's about credibility, following the rules, and integrating. And this change is still in its very early stages. This is where things really get interesting. Take a look at how quickly things are changing. It seemed almost impossible just a few years ago that lawmakers and banks would think of XRP as a legal form of cash. The SEC lawsuit went on for a long time. Regulators around the world were hesitant, and banks didn't want to take any chances, so they stuck with old infrastructure. Now we are in the present, and everything is changing right now. Ripple has its own stablecoin called RLUSD. which makes it separate from Tether and USDC. The Basel Committee has made it clear that XRP meets their funding standards. There are big hedge funds that publicly hold hundreds of millions of dollars in XRP in structured products that pay dividends. Additionally, China has connected the XRP ledger to over 3,000 businesses and hundreds of banks in more than 30 states. This is no longer an idea. This is the truth. Let's take a step back and talk about what this means for every market in the world over the next 10 years. Some analysts think that between 5 and 10% of all financial assets will be turned into tokens in the next 10 years. That might not seem like much at first, but when you think about the huge world market for stocks, bonds, derivatives, commodities, and real estate worth more than $1 quadrillion, even 5% is huge. Tens of trillions of dollars are at stake. XRP does not need to hold all of that. Even a small amount can change your life. Ripple's plan has never been to use XRP for everything. It's to add XRP to the system as the settlement layer that links the world's financial networks, which are currently very disorganized. Because every transaction and flow of value has to touch that bridge asset job, it might be the most valuable role in the whole system. Let's look at it in a bigger picture. Right now, SWIFT handles trillions of dollars every day, but it does so very slowly and at a very high cost. When you mix RippleNet and XRP, you get the same thing, but it's faster, cheaper, and you don't need to keep trillions of dollars in Nostro Vostro funds. That frees up cash, boosts productivity, and makes things better for customers all at the same time. It's easy to see why banks are paying attention now that Basel has cleared the way. Adoption is already being seen in how prices are found. This was perfectly explained by Brad Garlinghouse. If there is demand and there are no barriers to entry, prices will simply go up. XRP was held underwater like a basketball in the case. The market forces can now work on their own since there is no longer any pressure. As soon as Basel approval, institutional green lights, and connecting with businesses all over Asia are added, the money will start coming in. It will be very interesting over the next few years because of this. Billionaires have already put a lot of money into Bitcoin ETFs. Just think about what will happen when XRP gets its own ETF or when central banks start using it as part of their reserve plans. It will be different from anything we've seen in this business before on the demand side. The Basel professor said that Ripple could replace some of the technology that is already in place. I would go further. It looks like Ripple and XRP will become the foundation, not in a way that changes every system, but as the foundation that holds them all together. That's why Jake Claver said that the people might not be able to get XRP in the future. Institutions will keep and use it if it becomes part of the global financial system. This means that regular people will have a lot less float. Right now, we are going through the change. Now things are clear.